All right, welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and I teach my proprietary Safe Wheel options trade system for free. The system is currently up about 24% year to date. Now also, please type in the chat that you can hear me. I'm going to assume that you can hear me and I'm going to move forward. Also, please post any questions you might have earlier rather than later so I don't end the broadcast before I cannot get to your questions. All right, so let's get started with the earnings edge. What happened last week with the earnings? Loud and clear. Thank you, guys. Sounds clear. Good. Thank you. Let's get started with the earnings edge. As we can see my screen here, we traded NVIDIA, or I traded NVIDIA. And you can see it down on the year still. But this was down significantly because NVIDIA was it had a nice big move. And I made $950 profit last week on NVIDIA. You can see that my P&L went up significantly. Still down on the year. You can see that overall I'm up $950, but when you take into account commissions and everything, I'm actually down. My record overall is 23 wins, 9 losses, and 3 ties with this earnings edge. And ever since I changed the system up, started using 8 filters, my record is 8 wins and 4 losses. And I'm down about 9.6% year to date. And again, I implemented a new exit strategy where I have a 50-50 win rate, and my average loss is around $200 and my average gain is around $500 based on back tests. But you can see that what happened with NVIDIA this last week is indicative to what will happen in the future, that the wins are a lot bigger than what they used to be with the system, the new way that I'm trading it. Okay, let's get to the Premier level 5. How's that doing? This is where I trade the ES futures. Okay, and on this one, I am 10 wins, 2 losses, and 3 ties. And I have 2 open positions. The system has drawn down approximately maximum drawdown around 4%. And I'm currently up 5.7% for the year. So if you like low drawdowns and you like decent returns, and you want to outperform the S&P whenever the S&P is not in a bull market. So in a bull market, we're still going to make some money, but it's not going to perform as well as the S&P. But when you get into the other 3 markets, you get into the grind down, the crash, the sideways market, we're going to outperform here. So overall, the Premier level 5 will outperform. So the S&P has been down 22% year to date so far. That's been, the lowest drawdown since, not year to date, since April 8th when I started trading this. So we've been down 4% from peak to trough, and the S&P has been down 22. Now currently we're at 5.7, and the S&P is down about 11.5 since April 8th. So we're outperforming by about 18%. So that's an alpha of about 18% for the earnings edge. All right, next we will get into the Safe Wheel. I want to also say that the Safe Wheel guidelines flowchart is available, and also the 6 filters that I use for choosing the right stock. Those 2 items are available for under $100. So you're going to get a system if you're interested. For under $100 if you want to know exactly what to do every time, or you can just follow me for free and you can get the system for free. And that's why we're here. So what are we going to do? Where are we with this thing? Again, currently up about 24% year to date. Largest drawdown, I'd have to look at it, but it's probably not significantly high, maybe somewhere between 5 and 7%. And we are in Uber. You can see that we have our put hedge here. and it's 123 days. So I look at this, every week, and if this was around 100 days, I would consider, getting out and getting a new one, just based on how many days are left in the trade. But you can see that I have no further positions, no other positions. So last week I sold a put. So we're in the wheel strategy. You sell a put, you hope that you don't get assigned. That's what happened. I did not get assigned. The stock went up pretty good, and it kind of cost some money on the put hedge. So overall, it probably didn't make money last week on this system, but I think it was down 1% in the week. But what do we do next? Let's talk about what we do next. I'm going to look at my flow chart here, and it basically says that when you sell a put and then the stock goes up, well, obviously you're not going to get a sign, so you're going to be here with this put hedge and nothing else. And again, the put hedge is established. It's not too old. It still has good juice in it. It's not depreciating very fast because it's not under 100 days. And is it within 70% of the stock price? That's the question I'm going to ask right now, because do I want to keep this put hedge, or do I need to move to a new put hedge? And if I move to a new put hedge, I could move to a new stock. That would end the cycle. But let's take a look. So currently we're at 29.10 Uber. So I'm going to take 29.10. I'm going to multiply it times 70%, and I get 20.37. And this is at 22.5. So it is within 70%. So it is still viable. It's still good. Even though it's not within 80%. 80% is a little better. So the put hedge is a little far, but it's not too far. It's within 70%. So I'm going to keep it. And that means I'm going to stay with Uber. So that means that the next step is to sell a put, because we're part of the wheel strategy. So I'm going to go to the trade tab here. And option chain. And you can see which options. Oh, here's the put hedge. Which options am I going to deal with? I'm going to deal with the ones that expire on Friday. Which strike am I going to choose? What's based on a percentage, right? So Uber's currently trading around $29. So I want to get at least 1% of that. So 29 cents or more on a put. So I could go to the 28.50, or I could go to the 28 and still get at least $30 or 30 cents. I'm going to go to the 28. Because my put hedge is a little further away, I'll kind of choose the one that's a little further away here. So I'm going to sell this. Now, what is the sizing of the system? The sizing is already predetermined to buy between $5,000 and $10,000. I'm going to use one put and 3 put hedges. If it's between $10,000 and $15,000, I'm going to use 2 puts and 6 put hedges. If it's between $15,000 and $20,000, I'm going to use 3 puts and 9 put hedges. So you can see how that progresses. So we're going to sell here. Mid price 33. Make sure I'm selling a put, $28 put. It's cash secured put. And I'm using a margin account. Okay, we got filled now. Something a little outside the wheel, something that has to do with only the safe wheel. I like to say that I reinvented the wheel, right? Okay, so that's pretty funny, guy. All right, so I'm going to buy something here between around $6 at the most. I won't pay $7, but I'm going to buy a call to protect my put hedge. It's not really going to be really good protection, but it's going to be enough if we have some type of blowout scenario where Uber goes to $40 or $50. We want to be protected there. So I'm going to buy this 32.50 call. It's going to be for $6. I'm going to buy one. Again, remember, I'm dealing with 1 and 3 put hedges. Okay, so we're filled there. And I'm trading the account live right in front of you. Well, there's a couple other people that do that, but I have my reservations about what they're doing. But I'm one of the only ones. There's very few of us that trade live, but then there's nobody else that really shows their total account P&L. Nobody does that except for me. And if you find anybody that does that, please let me know. I want to see it, because I can't find anyone that'll show their net lick on a consistent basis. They'll show it when they're making money, but then when they're losing money for some reason, they don't show it anymore. Okay, so we have our system on here. Our safe wheel is done for the week. I don't even look at it. I'll look at it on Friday, okay? And on Friday, if Uber is over 32.50 towards the end of the day, I will sell this call and collect whatever premium I can get for it. Okay, well, that's it for that portion. Let's go into the questions in the comments. So, Uma, our hedge is severely tested, meaning overall lost. What do we do? Yeah, so the question is, do we keep the put hedge or do we get rid of it? And if it's within 70% of the price of the stock, we keep it, and that's what I did. Okay, sounds good. You guys hear me? Uma, is implied volatility and price of the stock work together? Well, implied volatility has not really too much to do with, I mean, it has to do with the price of the stock, but it really affects the effect of implied volatility it affects the prices of the options. So implied volatility has to do with the pricing of the options. The higher the implied volatility, the more the options cost, because the more that the stock has the potential to move, so the more you have to pay for that leverage. Joe, if we purchase the wheel already, how do we get the guidelines for the stock selection? So the guidelines are available for, I think I have them for just $39. So if you've already bought the safe wheel for $59, then you pick up the you can pick up the guidelines for, I don't remember, $29. It ends up being $89 altogether. So you can either buy them separate and get the $89, or you can buy them both at the same time and they're $89. Okay, Guy, I'm not sure what you're talking about here. It matters. Will, let's see. Spartan Nash teams up with Uber for grocery delivery. So it sounds like a fundamental story that Will's bringing forth. And it's always interesting, but it doesn't affect how this particular system and any of my systems trade. But it's always interesting to know those things. But the fundamental analysis doesn't mean anything, or a story about the stock doesn't mean anything in terms of how it affects what we do or what I do with the trade. Will, I was up 287 at the peak of Uber, now only 88. Yeah, Uber hasn't been doing well for us lately. Uber, year to date, up 120 bucks. So I'm sure I was doing better than that before, but I'm still up with Uber, and I like Uber. I think it has a lot of potential. It's been doing that perfect little thing where it just goes up enough to not hit our long call and costing us a little bit on the put hedge. But still up for the year with Uber, and I think you said you are too. Guy, sounds cool, but I'm always reluctant to use delivery services. I use, what is it called? I use this service almost all the time. I mean, like DoorDash. I get a lot of my stuff through DoorDash. Walter, Macy's back over $20. Uh-oh. There's Macy's. Oh yeah, almost $21. With the juicy premiums earnings on the 17th. If history repeats, similar retailers will disappoint. but Macy's will outperform. Probably has a lot of that real estate. Plus a 3% yield, I guess, if you're holding it during the period where you can collect the dividend. That's always nice. But I still am going to stick with Uber. I'd rather be closer to $30, and the implied volatility with Uber is good. I like it here. 65, 55, 50, 60s. I like that. Okay, Jay. So on the 3-put hedges, we are long volatility. Yes, technically, but again, think about weighted vega. So we're not long a lot of volatility compared to the short-term stuff. But so in this current vol crush, would our hedge only come back to par if VIX explodes? Or will it tend to come back to the mean? Yeah, I mean, the put hedges are more, they have probably more, they're more dictated based on the delta than they are about the implied volatility, because they're so far, one, they're further out of the money, and two, they're way further out in time. So the volatility doesn't affect them as much. And the delta, the direction of the stock, affects them more. And we like to sell short-term premium up here that we know will depreciate much faster than the long-term hedge. So I hope I answered your question there, Jay. Walter, please hit the like button and subscribe to the channel. I want to remind everyone to do that. That helps other people get a hold of the system for free. And I think it helps people because when you compare it to other things that are out there, I think people are getting ripped off. And this is something for free that's actually better than people are, you can buy something out there that's not anywhere close as good as the safe wheel strategy. You'll lose money with that strategy and you pay thousands of dollars for it. So it's, let's get this out there. Let's show this to other people. Hit the like button. Okay, something about Guy. Here we go. Not relevant, but I got blocked. Is Guy blocked? I want to do some type of comment. I don't know. You're not blocked. Here you go. You're right here. Uma, what is weighted vega regards? Look up, go into the search terms of YouTube, hit weighted vega, and Ron Bertino has a video on that. Really good video. And what is weighted vega? Weighted vega basically means that near-term volatility, in other words, things that expire earlier, will move a lot more compared to things that will expire later in terms of volatility. And the volatility models that are used, like in Thinkorswim or even on OptionNet Explorer, they're not accurate because they cannot take weighted vega into account. And so the only way to take weighted vega into account, well, there's a calculation you can use, but the only real way to take it into account is to actually run the real back test and look at the real history of what happened when you have a system. It's not accounted for in the backtesting softwares of the world. It needs to be understood if you're going to be dealing with options in any kind of sophisticated manner, or any kind of manner that would help you make money. And Guy was referring to the algorithm, I guess. Okay. Uma, thank you. You're welcome. Good. I'm glad that you understood that I got your question answered there. Are there any other questions? I'll sit here for just a few seconds here, see if there's any other questions. Okay. All right. Well, I'd like to say this. If the P&L is not real, what else are they trying to conceal? I'll be back next week, next Monday.